What if I told you that the reason you suck at trading is because you keep overcomplicating things? How would it be to implement a few basic strategies and take your trading to the next level? I know for me personally, once I implemented this one basic strategy, it took me from taking multiple losses and not really ever being able to profit, to being able to profit consistently in both bearish and a bullish market. I am so excited to bring you guys today's video. Today we are going to detail trading ranges. What is a trading range, how to use a trading range, and why they're beneficial towards your profitability as a trader. I know this is going to be something that you guys are really going to enjoy because I know a lot of the top traders use this simple strategy to make all of their money trading. With that being said, if at any point you find this video helpful, do myself a favor and leave a like, comment, and subscribe to this channel for more updates in the future. If you want further updates on my personal analysis that you might see in my videos, feel free to click the invite link in the description below. There you'll be able to get connected to my Discord server where I will post all of my private analysis moving forward. Thank you guys so much for tuning into today's video. Let's get right into it. Hello guys, and welcome back to today's video. Today I wanted to actually go over and teach you guys how to draw a trading range. Now, trading ranges are important for a couple factors. One, it helps to decide kind of where price could potentially go for a short opportunity or even for a long opportunity as well. Vice versa, either or works. Trading ranges are very beneficial when it comes to day traders. For me, one of the biggest things that helped me to actually trade profitably inside of a bear market was the fact that I understood that my strategy no longer worked. What worked throughout the bull market in 16 to 17 with some of these cycles no longer served me inside of the bear market. And now with the bear market, oftentimes most everything's going down and then you catch these swing bounces in the process. But if you're somebody that was more or less just buying and holding and not really having a set plan, you were getting wrecked and taking massive losses throughout this bear market thinking that prices were just going to go back up again. Now, one of the best things that helped me for actually profiting inside of a bear market was the fact that I understood that the same profits were not going to be had as they were in the bull market. I wasn't going to wake up to some of these cryptocurrencies going 5, 10x in value over the course of maybe a week or so when that's just not as likely anymore. And so what you can expect is to take smaller positions, maybe try and scalp anywhere from about a 1, 5, 10 up towards of a 30% move at the most, and then kind of base your trading plan around that. So one thing that helped me was understanding that my trading plan no longer worked, and so I had to transition and find something that did. The same moves as far as percent return were not being met in the bear market as they were in the bull. So one of the best things that helped me was actually learning how to develop a trading range. With developing a trading range, the best thing that you're going to want to be able to do for yourself is understand exactly what a range is. Now, a range for me and how I trade ranges are I label a support zone and then I label a resistance zone. Now, this will create a horizontal support and resistance channel where I can look to take long positions or I can look to take short positions. With trading ranges, it really helps to be able to margin trade and use leverage. Specifically, this is the main reason why I don't day trade, is because of the fact it's illegal for me to actually trade margin in the United States. The laws state that it's illegal for me to margin trade. I'm not going to put money on an account that could potentially, I could see losses in because of my mistakes. So with that being said, keep in mind, I don't really day trade, but I do know how. And when I was doing this in the bear market, it was very profitable for me. So the way that we're gonna go ahead and do this is first label your support zone. Now, obviously, we had support down here at the base of the move, which took us to about the 3,300 area. And this is a bit next chart. Now, one of the best things that you can do for yourself when actually looking and trading these ranges is to zoom out. Don't get so caught up on the short term. Zoom out and take a look at the support and resistance zones that we have on the daily time frame. Now, we have a strong support at this 3K region. We bottomed here, and we can also see that we had a retest of this before we ventured into the extended 5-wave Bitcoin cycle. So here to me is a good support zone. So we're actually going to label our supports green. Now it's important for us to label the resistance. So obviously, if we zoom in here, I always like to start off with the short term and look in here and figure out where the resistances line up, and then zoom it out to the big picture and find out how they line up to the big time frame. Now, obviously, we had a resistance here. We're going to go ahead and label that red because we've hit this peak once, twice, almost 3 times. We've hit this peak 3 different times and then retraced. So that for me is a very strong indication that this is a major resistance that you could look to potentially take short positions in. Now with that being said, we're going to now zoom out to the big picture and figure out where the resistance zones line up with this previous cycle that we had. So while we're looking at the previous resistances in the last cycle, we also want to be looking and seeing where the resistances are here in the now with the current cycle. So we have one right here. How does this line up with the last cycle? Well, we had our first lower high right here. Prices momentarily stabbed out to about 5K before we retrace. So right here, this to me is a strong resistance zone. Now, we don't really have anything else to play with up until about here. So if we come over here, where is a strong resistance, or it can even act as support if it's in the last cycle. Remember that. Support and resistance are just zones. Price will behave accordingly and they will react to these zones. So what was support in the bull cycle will probably act as resistance in the bear cycle, or should in turn, unless we're actually bullish again. So with that being said, we had support right about here. So I'm just looking for the most price reactions. We had one here, 2 here, and then a retest after the breakout of 3 before we impulsed further up. And so now we're reacting, and that puts us at about the 5,500 region. So with that being said, we've now labeled a zone. And this is the zone that I'll be watching with this current price action that we're seeing here. Now with these zones, one thing that you want is anywhere that we have a strong, significant bounce back up into resistances, that can be labeled as a new support zone. So we had one right here before we got a strong impulse up, and then we hit our resistance once again. So with that being said, we've now created ourselves a trading range to follow. Now, once you've created yourself a support and resistance trading range, it's important to understand how to actually take your positions when it comes time, whether you're taking a long position on support or whether you're trying to short the market at resistance. So what I do is I like to find a price. Now, price has reacted to this resistance level 3 different times, almost 4, with a rejection. So that to me tells me that this is a good price to start taking positions. Now, the best thing that you can do for yourself is try and find your positions where you're risking the least amount to get the max return possible. So with that being said, how instead of taking your positions, and let's call this 4281 our number that we're following. Now for me, I like to draw a little bit of a box, and then I like to make small position or small orders depending on whether I'm longing or depending on whether I'm shorting, and then I'll take a little amount in each segment up. So what I mean by that, and we'll actually zoom in here, take a horizontal line, take a small, now for here, if we zoom in here, let's drag our box up a little bit so it meets the criteria. So for me, I'm taking positions in little increments, and this is called a ladder. Now none of these are going to be exact, but I'm just showing you guys exactly how I do it. So I take little positions, and then as price ventures up, it's getting filled all the way through, it hits my main target, and then I'm fully invested into this trade. Now if it keeps going, I have a stop loss set in place, so then it'll just cut my losses, and then I won't get wrecked on the way up. But this is there's one thing I want to actually go over with this, and there's 2 different methods for taking your ladder. Now this is method 1, and this is actually the one that I advise not to do, but it's totally your own trading plan. Now with method 1 is you have your first resistance zone, your first resistance number, and that takes us to the 4281 number right here, and this is the red line. Now you can make your position from the red line down and ladder your position down, or you can do it the opposite and you take your position here at about 4281 and then you move it up, right? And so this to me is the more accurate in my opinion, and this is the one that I like to do personally, just because you're basically minimizing your risk that you're taking involved with this trade just a little bit more. So instead of taking your last position at the 4281 number, you're taking your first position here and then laddering out accordingly. So we'd go here, go about here, here, and then we have one final one up there. And so this is kind of how I actually label my zones, is I find a mid-ground point, a middle number that I can agree is a good resistance or a good support, and then I go through I label that and I either pull my ladder box down or I pull it up. For me personally, you guys can just understand that this is what I do. I pull it up, but I have seen other traders pull it back down, and this is just a little bit more risky because you never know. So maybe price pulls something like this where, let's get a brush out. Maybe price retraces, and then we kind of chill here, and then we bounce back up. Only what happens if price bounces up to here and all of your ladders are down here? You're now risking yourself for a stop run when you could have just drug your box a little bit up into a less risky area, and you could have been taking these all the way up. And so it's really just your personal preference with how your risk to reward is set up, because it also, there's so many factors that go into play when it comes to trading these ranges. You have leverage. How much leverage are you taking? You have position size, and all of these factors go into play. Let's go through and delete this box because this is the one that I don't use. So this is how I label my shorts. Now keep in mind, even right here, where you're only getting minor wicks that are tapping in here, even if you're not getting filled throughout your entire position, it doesn't change the fact that I'm more willing to risk less and get a better risk to reward ratio for myself over trying to rush in too quickly and then get stopped out by the market, because I've done that multiple times and it's just not worth it for me. I'm not in any kind of rush when it comes to taking these trades. Maybe this trade doesn't even ever come back up to my resistance zones and we just fall through support, which is possible, and that's fine. It really doesn't change anything for me personally, because of the fact I have patience with how these markets mature and play out. So you guys now know how I label my shorts and how I take my shorts with my boxes. Now we're actually going to label an entry point, and I'm going to show you guys how I place my bids when it comes time to take a long position. So with that being said, on shorts I drag from the mid ground point or the middle line up, and then I'm catching wicks into here. So that's how I label my shorts. So in theory, when I label my longs, it should do the opposite of that. So if we come in here, let's get our box. Now let's say I wanted to take a couple bids down here at the 3,400 area. So I would come here, I'd label my box. Now with shorts, I'm pulling it up. With longs, I'm pulling it down in hopes of catching wicks on the downside. So right here is a pretty good area for me. And so let's not get too confused here. Let's label this red so you guys know. This is shorts, this is long. Now I come in here and I do the same thing. I ladder down. I'm just trying to take as many positions as I can. Usually I take about 4 to 5 in my ladder, just because that sets me up for the best setup that I can, because you don't want to go all in right at once, but you also don't want to leave too little on the table. You don't want to only put 2 down and then the price ventures all the way down here and then it bounces out where you could have added more positions. So the way that I like to do it is I just like to take small increments of my position all the way down. And then this just helps you to micromanage it and allows you to just basically catch the best risk to reward ratio entries that you possibly can. So with that being said, we've now labeled our support, or we've now labeled our buy ladder for where we're going to be casting our bids. So what we're watching for here is for price to actually retrace and hit down to this box. Once it hits our first target at 3,400, that's when we're going to be watching to see if we can get some of these lower entries filled. Because for me personally, I could drag my box up, like you guys saw with my shorts. I could drag my box up into like here, but the problem with that is, if price really decides to retrace, I could be getting stopped out where I could have been taking lower positions and then riding the whole bounce back on the upside. Because this is what happens all the time. Sometimes you'll be watching a market and trading a range, and prices will retrace, and then they will, if you have your box drawn up too high, it'll retrace all the way down to your stop, and then it'll bounce back on the upside to the opposite end of the trading range, and you could have caught yourself something like a 25% move plus leverage, that's a very nice move in general. And keep in mind, guys, even with these day trades, you don't have to be using leverage. That's one of the misconceptions when it comes to actually day trading, is the fact that you have to use leverage, when that's not the case. This entire trading range from bottom support to the first major resistance is 30% in and of itself. So with that being said, if you bought something down here, you could have traded this exact same range and still got a 30% profit with your position. Now that doesn't include your actual leverage to that, and so if you're adding leverage, that's just more money that you could potentially be making, or the best way that I like to look at leverage, risking the least amount to get a bigger return of investment. So for me, when it comes to using leverage, some tips that I can give you is when taking leverage, don't get in the mindset that just because you can take out a bigger position and make more returns, don't get stuck in that mindset that that's the way that it should be, because that's not how you want to use leverage. When you're using leverage, you're trying to minimize your risk involved with taking the position in the first place. So say that you had $100 that you wanted to start day trading. Now, if you use leverage, a 1% trade without leverage would be risking a significantly more money than a 1% trade with leverage. A lot of these new guys getting involved, and some mistakes that I've personally made in the past when it comes to trading with leverage, is the fact that you see that, oh, 2.5x leverage, that's 2.5 times a position that I can take, and that's just more money for myself. And that's not what leverage is for. Just because it says 2x, 5x, or whatever it might be, doesn't mean that you're taking out a bigger position to make more money. It means that you can just risk less of your portfolio and still get the same return on investment. So that's really what it means to be trading with leverage. So with that being said, guys, this is how I develop my trading ranges. I just go at support, and then I draw my trading range with a buy ladder, and then I'm actually looking to micromanage my position, so the lower it goes, the more I'm catching. And that allows me to just keep it very simple. It allows me to kind of just set a position. I know where the range is. It doesn't matter where all of it is in the middle of this. I know where I'm looking to take shorts, I know where I'm looking to take longs, and then from there, I can really just kind of sit back and observe, and I don't have to spend all of my time staring at charts. I can watch, I can micromanage my time, and I don't have to stress myself out, because that's one thing with day trading, is when you're trading these ranges, you now know when you're taking your positions, long or short, and then everything in the middle is just noise that doesn't really pertain to anything that you're doing. One of the worst things that you can do as a trader is just get so caught up with each and every swing move in between, and that always happens when you don't have a trading plan in place. So with these ranges, it allows you to put a trading plan, kind of stick to it and forget about it, and then just watch how the market matures and how the price action behaves to your range. The better that you get at this, and the more ranges and these more channels that you trade, the more consistent that you're going to get, and the more little bits of knowledge that you're actually going to be able to use to the next range to benefit your trading plan and profitability as a trader. Because keep in mind, guys, losses are what's to be expected. It's something that happens to every single trader. Every profitable trader will tell you that they lose just as much as they win. The only thing that separates them from the losers and how they're actually able to profit in the market is their risk to reward ratio and their position sizing. Because if I came in here, and let's just go ahead and let's delete my trading ranges for the time being so I can show you guys what I'm talking about. With these trading ranges, you could be somebody that takes all of your position size at your mutual number that you've selected, your mutual's resistance or your mutual support. Now you could take all of your positions right here and just let it go. And some people do that. But for me personally, I like to set my buy ladder, because then I can catch multiple positions in between, and then it just helps me to micromanage my position. And that's the way that I behave with these cycles. Now with this one, with this specific trading range, how I would look to target this is, since we have two support channels, we've already basically made a ladder in place. And so for me, I would be looking to catch my bids in this range right here. Now this is a good support range to catch because we've had the lowest support right here, and then we made their first higher low right here. So anything inside of right here to here is going to set you up for a very low risk, high reward entry, where say that you buy the middle of here, you're looking at a potential 27% bounce on the upside. that you could also have leveraged into a position. So with that being said, guys, this is the video I had for you. This is just a simple introduction to trading ranges. I didn't get much into risk to reward. I didn't get much into position sizing or anything like that. I just wanted to show you guys how I personally like to trade these trading ranges and how you can look to target Bitcoin in the future or even right now. We have a nice range that's formed here. With Bitcoin moving forward, I would expect this range to behave similar to what we had at about 6K. We had the strong sell-off from 20K, and then we bounce back and forth up and down at 6K support. And I would expect this trading range to behave similarly, because for me personally, I'm expecting a lower low to come. But that doesn't change the fact that we could still see lots of swing moves in between and channel sideways throughout this range that we've established here. So what I wanted to show you guys is how I trade ranges, how it's very simple. It doesn't take a lot to really be able to take positions in this. Now, if you're somebody that's never traded leverage, don't try and trade leverage right now. Try and trade these trading ranges with a small position and just practice it, because you don't need to risk a whole lot if you're not a very good and established trader. Risk a little bit of money, play around with it, mess around with these ranges, develop a trading plan before you ever take your trade, obviously, and then just kind of see what you can do with it, because these ranges have been very profitable for me. It's helped me to really understand how to develop a strict trading plan and stick with it, because when you have a trading plan, all of the sideways move in between, it doesn't matter, because you know where you've taken your positions, you know where your stop loss is, and you have all of the details in place to where there should be no reason to stress about it until price either proves you right or proves you wrong. It doesn't matter. So this is what I had for you guys. I just wanted to teach you guys a quick video on trading ranges. Really all I went into detail with was the support and the resistance and then actually how I cast my buy ladder. Now, how I cast my buy ladder is going to be completely different from your guys's, because everybody's trading plan is different. I'm just showing you guys what I do personally and what's helped me in the bear market and what I'm really looking forward to doing in the bull market with a lot more of these swinging moves and swinging setups. Right here is a good time to be looking to take some positions in this range. We don't know how long we'll range here, but it doesn't change the fact that you can set yourself up for some very significant gains, about 30% just to the first support to resistance, and that's a very, very profitable setup. So thank you guys so much for watching this video. I will catch you guys in the next one. Peace out.